very early morning video for you. The dog needed out, and now I can't sleep, so I figure, what the heck, let's come out and do a video. Let's talk about the wobbling economy and how the Federal Reserve is doing nothing about it. Now, this seems to be very common thought out there when I look at the mainstream media and some of the articles that I am reading, and that the idea that there is a wobbling economy, like less people are quitting their jobs, less people are getting hired. There's a slowdown in consumers. There is a slowdown dramatically in the housing market. You have the threats of inflation coming from, the ideas of tariffs coming in the future. All this stuff is creating what would appear to be the wobbling economy, so to speak. And if you look down in the article that I leave down in the description, this is exactly the thought that is being pushed out there. Now, when I think about the Federal Reserve not doing anything about it, I don't know if that's necessarily true. Like, the Federal Reserve is doing something about it. They are giving the forward guidance. They are giving the expectation of what it is that they plan on doing going into the future, right? There is the idea that there's going to be interest cuts somewhere at the end of 2025, possibly in June. Who knows what it is that's going to actually happen going into the future, but the Federal Reserve has committed themselves to that very real possibility of cutting interest rates in the future, just nobody knows exactly what or when. Now, again, this is the game that they play in order to give that guidance to the markets to keep them basically locked into the words that they are using. However, the Federal Reserve is not just using this monetary policy of their words so that they can just play with the monetary policy using their words. They're doing it because they are forced to do it on account of a very low neutral interest rate. Now, this is important to understand because out of all the economic articles that I ever read out there, very, very few people bring up the neutral interest rate. And now the neutral interest rate is when the Federal Reserve is neither accommodating nor restricting the economy. Excuse me, they are neutral. And now when and where neutral is very difficult to see. Not even the Federal Reserve can give you an accurate telling of where the neutral interest rate is today. They have estimates of where the neutral is, and a lot of economists out there can suspect on where it's going. When it's when you have an elevated inflation expectation, what will end up happening is that the people themselves will then demand the markets, the people, everybody out there will then begin to demand a higher return. They're going to be asking for a higher return on their capital investments, and this is going to raise the interest rates. This is one of the reasons why the Federal Reserve can actually conduct themselves with any action they want, so long as they deliver the message of expectation in one particular direction or another, will create the outcome that they are looking for. And if you have an elevated inflation expectation from whatever tariff threats or slowdown in the economies or whatever reason you want to give to it. Like right now, I think the big one is probably the threat of tariffs. Now, if you add this element to the economy, to the markets, and to their expectation, the neutral interest rate will begin to rise. And if it begins to rise, then the Federal Reserve doesn't want to cut too quickly and past neutral. Like neutral elevates and then they cut and they fall below neutral. Now they're in a stimulating economy or in a stimulating position, not necessarily a stimulating economy, but a stimulating position. And this is not the position that they want to be. They want to be somewhat restrictive or neutral or getting to neutral. But if neutral can be elevated, they can stand still and just wait for neutral to arrive. And again, not very many people are looking at the economy this way. And the reason why they don't see it this way is because most economists are looking at the Federal Reserve like they're trying to get inflation down to 2%. And I find this to be like just so ridiculous. This is one of the most biggest misconceptions that has been pushed out there throughout the mainstream media and just about every single person out there who talks about the economy and talks about the Federal Reserve will talk about this 2% target. And this is so mind-blowing that once you see it, once you recognize that they are not going for a 2% target, but going for a 2% average inflation rate over time, and that appropriate monetary policy is seeking to achieve inflation that is moderately above 2% for some time, once you see that and you recognize it and you know that's what the Federal Reserve is doing, all this stuff doesn't seem like the Federal Reserve is not acting. They are acting. Right? They're acting with their words. The adjustment of interest rates is not the effective tool. I know this. Most people don't. So when they say the Federal Reserve isn't doing anything, they're like, sitting around doing nothing at all, just sitting, like waiting or whatever. That's not true. They're giving forward guidance, right? This forward guidance has a very profound impact on the economy, and they know it does. We just did a great live stream, members only live stream, breaking down Philip Jefferson's speech, where he described monetary policy using their words and not a single thing about interest rate adjustments. He did an entire speech. It was a very long, very detailed speech talking about how it is that they use their words to conduct monetary policy, and there was no talking about interest rate adjustments within it. There was a mention. They talk about interest rate adjustments as being the topic, but the entire thing was all about how it is that they use specific sentences to create asset price fluctuations, like causing the asset price to go up because the market is listening and waiting for specific sentences coming from the Federal Reserve, and the Federal Reserve knows this. Or else Philip Jefferson wouldn't be able to talk about it in his speech. So once you see this, once you see the credible threat, once you recognize it, then you go and you read articles like this, you can see how misunderstood this particular author of this article really is about what monetary policy is being conducted like. Because he, like in his mind, I'm sure he's believing that the Federal Reserve is trying to get inflation down to 2%. They're not. They're trying to have it moderately above 2%, which is right where it's at now, right? We don't know what moderately above 2% is. They don't describe it, so we just have to kind of assume that it's somewhere above 2%, but don't know exactly where. Here we are, right? Somewhere a little bit above 2%. And this is going to be for some time in order to achieve a long-term expectation of 2%. Well, once you see this and you know that, and you're like, okay, well, the Federal Reserve is going for this position. Why would they change position if this is what they are going for? Right? Somebody says, well, the Federal Reserve is not acting. Well, it's like, yeah, I know they're not acting because they said that they wanted to be right here. Why would you act any differently if this is where you wanted to be? Right? This is like, it was just like, don't change what you don't want changed. This is like the Federal Reserve conducting themselves in this fashion. And then on top of it, by having literally the government doing everything that it's doing, the stirring up the hornet's nest of credible threats out there of what can possibly come, this is going to elevate the inflation expectation. And again, it raises the neutral interest rate. To me, this makes perfect sense. It doesn't, like, people are like, man, you have to do a whole lot of mental gymnastics to figure out what you're talking about. I'm like, you really don't, right? Because this is what the Federal Reserve has communicated. Not like, I'm just, given the information as I see it from what it is that I have learned. And all the stuff that I talk about, I have proof of from the Federal Reserve's own statements. Like, I don't make stuff up. I don't assume, and I don't, you guys know when it's my opinion, but I don't assume any of this stuff that I talk about when it comes to the Federal Reserve, the neutral interest rate, the credible threat theory as far as them using their words to guide markets and stuff like that. This is all coming directly from them, you know? So to me, it's not like a mental gymnastics thing that has to be played. You just have to really do the work to understand that the Federal Reserve is using gaslighting as their, I'm sorry, they are gaslighting the people. They are using it's like a mass psyops operation that has taken place, and it is so, it is like I almost have to say it's like awesome. In fact, I do. It's awesome to see it, right? Because I can't believe they're actually pulling it off. And, what really blows me away is that how it is that they could have delivered the information that says, hey, this is what we are doing to the people. This is what we are going to force upon the people. They are not going to recognize that's what we're doing. We are going to tell a whole different story, and they're going to absolutely believe it. And I'm thinking, like, in my mind, as this stuff is going down and I'm watching it happen, I'm like, well, eventually people are going to catch on and it's all going to be over, right? I mean, like, how many people have said, well, the Fed can only cry wolf so many times? And it was just like, apparently not. The Federal Reserve is not the ones crying wolf. It's all the people are crying wolf and believing it, that that's what the Federal Reserve is doing. And the Federal Reserve is like, yeah, huh, yeah, big bad wolf. Yeah, you're right. Yeah, big bad wolf over. Right. And like meantime, they're like, holy shit, man, can you believe that? They're all believing that big bad wolf thing. They're all doing it to themselves because they don't truly understand what it is that's going on with the Federal Reserve and their monetary policy. Right? And I mean, it's not sad actually. I've come to the realization that the people who do understand it, like we do here, like we got 90 people watching this early in the morning, right, which is awesome. Thank you all for being here, and thank you for hitting that like button. But I think about, like, I used to get kind of frustrated with it. It's like, man, why aren't more people picking this thing up and talking about it? And then I'm now realizing it was just like, it's not for them. Right. This is for the 90 people here who are watching, the 98 people who are watching, the few thousand people who may end up watching this later on after the video gets uploaded, and those who have studied the credible threat theory along with me. We get it. Like when we read these articles, it's just like, and it was just like, oh man, this guy is so lost. It was just, and I mean, I don't mean to feel like I'm like some arrogant dude who's bragging it up that I'm smarter than everybody else. It was just like, I just don't get it. I wish other people would pick up this information because I know they could break it down a hell of a lot better than I could. Right? I mean, I'm just some dude who's sitting in an Explorer figuring this stuff out, breaking down Federal Reserve speeches. And I'm thinking, man, there's people out there who could take this information and really roll with it. But yet they don't. Right? And yet they go and it's just like, well, the Federal Reserve trying to get to a 2% target. And I'm like, have you ever seen the Federal Reserve achieve a 2% target? In the history of a 2% target that was adopted in 2012, has the Federal Reserve ever had a 2% target that they have achieved? Never. Like, they've passed 2%, they've hit it on the way by one way or the other, but they have never, ever had inflation steady at 2% in the history of their existence. I don't know why people would believe that they could do it now. Like, I mean, I just have no idea how it is that people have got that in their head, that they think that the Federal Reserve can achieve a 2% target on inflation when they have never been able to do it in the past. Okay. Now, they have given forward guidance. They have gone for inflation that is, over the long run, achieving the inflation expectation over a long run. So now they have a different view of an inflation target being an average inflation rate over time, or as they put it, flexible average inflation rate targeting, which means that they can have it at 1% or 3% forever and still achieve their goal of a 2% long run average. You see where I'm getting at? Is like the 2% target doesn't exist. It simply is just a made up thing. All right? It's completely arbitrary, and there's no real 2% target to be had. And once you see it in that fashion, then all these articles and everything that you read, you realize that everybody has the strategy built upon the idea that the Fed is going to push to this 2% target, when actually they are going for moderately above 2% for some time, which means that they are achieving what they were meaning to do. Yeah. How far are we into this? 15 minutes. UE in the house. Thank you, Larry Bird, for being here. You guys, look at all of you up in here. 115 people watching and hitting that like button. We got 38 likes going. QE should have ended before millennials' purchasing power really took off. Before their purchasing power really took off. All right. The problem is the interest on the debt became more than defense spending. Oh, I think there was a bigger problem than that, but yeah. at this point, it doesn't really, like, at this point, there is no solving that debt problem, right? Like, I don't even look at the debt and being like something that is going to be like, well, what about the debt and how are we going to take care of that? You're not. There is no taking care of that debt. That debt is not going to get taken care of. There is none. The only thing that you can do is try to maintain the confidence in people buying more of it, right? The promise that you will, this is the only thing that's going to continue on. There is no solving the debt. The debt will continue. The debt will continue so long as you have confidence within people who are going to buy that debt, buy the U.S. Treasury debt. The way that they will continue to buy it, so long as we have the biggest army and defense, military. Basically, we need to protect the shipping channels, and we need to force, not necessarily force people, even though that seems to be what the case is. But what we need to do is convince people that we will send men with guns to take everything that people have if they don't pay their taxes. So if you got those elements to it, then pretty much you'll probably continue on, right? Because what's funny about it is that it's the world itself that is really screwing themselves by continuing to borrow money in dollars. Right? You see, it's not the United States that's doing this at this point. Like, the United States is like at a point, it's just like, really? Like, here, okay, let me take it back a little bit. Man, I'm really getting wound up. Good coffee here this morning. Everybody else got coffee? Cheers. All right. So this is what's funny about it, is that when I hear something like all these foreign nations are taking advantage of the United States by us buying their stuff. Now, I think that this is really funny to think, because what we are doing is we are consuming the production and resources and labor of other nations, and we are offering them literally nothing more than an IOU. And somehow they're taking advantage of us. Like, I mean, I'm just okay. Let me just back it up again a little bit, because I'm looking at the bigger picture of it. And I understand that there's all this, pushing and pulling and stuff like that, and political blames and stuff like that goes on. But I'm just going to back it up again and just look at this. These people all over the world are taking their natural resources, their environmental impact, their labor. They are producing stuff, sending it to the United States, and the United States sends them an IOU. And somehow they're taking advantage of us. Okay, I'm still trying to figure this one out, right? Because I don't see it that way. I see it like, damn, we are in a very unique position. And the moment that this is over, it's going to be quite painful, because we don't produce enough for ourselves to maintain this elevated standard of living that we are taking advantage of, because everybody all over the world is sending us stuff and we are sending them paper promises. And this is what's going on. So now I think about how it is that the people outside of the United States continuously write debts that are due in dollars. That means that they said, hey, somebody who's not a citizen of the United States, or a corporation or a bank or a government or anything else, you're just an entity somewhere outside of the United States, I'm promised to pay you $100. Here, can I borrow $100? Now, these people outside of the United States just created this contract and this deal in dollars. That contract now starts getting used like dollars. So when people are thinking about like how many dollars exist outside of the United States, are they counting those contracts too? Because those contracts are acting like dollars outside of the United States. All right. See, this doesn't have anything to do with the United States at this point. It was just like, what are y'all doing out there? You're creating more money that doesn't have anything to do with the United States, but yet now these are transactions that are happening in dollars that were contracts that were created outside of the United States. Doesn't have anything to do with us. That's crazy to think about, right? So now who's taking advantage of who? That's giving value to the dollar. That doesn't have anything to do with us. Those people are demanding dollars to pay those contracts, and we're over here going, what contracts? Holy crap, you got contract. You're going to cause a liquidity crisis. You keep writing those contracts like that because once they all come due and you don't have enough dollars to pay for all those contracts that have been written, there's going to be a huge demand for dollars that the Federal Reserve may not be able to supply. The demand for their liabilities literally shooting through the roof. And you want to talk about destroying the United States exports? That's exactly what would happen. I don't know how many people consider it like this. Nobody does, really, actually. You have to be like, you have to go to the Rebel Capitalist every single time the event goes on. You have to, be following people like Mike Zuber, and you have to be, joining in on all the discussions to understand all these little different aspects of everything that is being happening out there, that's happening within the economy, within not only in your own personal life and how you are interacting with the economy, but to understand the economic forces that are playing out within it. Okay? Seeing a game, although it's a lot of fun. All right, $5.19 from BP. Thank you so much. I think the tax cuts and the cuts to the IRS is proof they aren't serious about getting rid of the debt. Thank God for the reserve currency status. Yeah, I totally agree. Um, in that sense, like I don't think they're serious about getting rid of the debt. Like I don't think that. In fact, I know they're not, because if you start to get rid of the debt, which people in like when we think, oh man, if I was out of debt, I would be so happy. Right. And it's true. Like, it's just like you don't have any credit card debt, you don't have a mortgage debt, you don't have a car loan, you don't have any of those stuff. But yeah, you have all those possessions, you'd be super happy. Right. Now, I think it's going to be a very different story for people to truly understand what it would be like if we start removing the debt from the United States, like start lowering the debt issuance and then eventually start paying that debt off. Now, what that ends up being like is less new money coming into the system. When you have less new money coming into the system, what you are going to have is pain and misery and suffering happening within the economy, or within the people within the economy. Not everybody's going to suffer, because some people are going to recognize what's happening and take advantage of the situation. But most people are going to end up suffering in lost wages, lost work, lost, business transactions. All that stuff is going to really start to slow down as the new money that was pouring in from debt issuance is now going to start disappearing, and there's going to be less money flowing around through the system as it's paying off all these debts, and demand for it is going to be starting to skyrocket as the debt issuance that had taken place outside of the United States is still going to be demanding dollars. So you can see that if you think about, like, if there was no new money coming into the system, then it's going to be debt issuance that had taken place that becomes expired, that starts removing debt and dollars out of the system. And when this starts to take place, there's less people who are going to be able to finance, who are going to be able to, go out there and do anything within the economy, essentially, because it's all disappearing. It's all slowly going away. Now, on the flip side of that, if you don't do something like that, right, and slow the economy down and cause the pain and suffering and misery within the people in order to, in order to extinguish a lot of that debt, right? If you don't do that, then what you're going to end up doing is you're going to inject new money into the system. So as long as debt issuance is ticking up, people are like, oh man, they got all this, Department of Government Efficiency and stuff like that. They're going to start, figuring things out. And it was just like, as long as that, just go on usdebtclock.org, and as long as that number is increasing, that's new money coming into the system. That's it. I don't care how efficient they get at, taking it from these people and not, whatever. That's fine. Like, you can do all that you want. You can cut those people off, fire them other people, take all this money, whatever you do, that's fine, right? But as long as if you go into like usdebtclock.org and you see that US debt climbing and it's not shrinking, if it's going up, if the deficit is going up, then that's new money coming into the system. And I guarantee you separation between the rich and the poor will take place from that. Those are the only two paths, right? You either have more separation between the rich and the poor, and then the idea that it can trickle down to everybody else, and at least they're not suffering in pain and misery and all that other stuff as they pretend to try and, reestablish a middle class or something of that nature, people at the very bottom of the line will have no chance of being able to get to the other side of it, because if you haven't got an early start from an early age, then you're going to have some hella good skills, or, good friends or good something going on to help you along, because an average everyday job isn't going to cut it anymore. So these are the unfortunate consequences from it. Now, whatever one, pick your poison. If you don't like the inequality, then just kind of figure that you'll never have anything new. You won't have any business. You won't have, a whole lot of people excited about, having a good, happy, functioning economy, because people would be suffering in pain and misery, and you would watch retirements, dwindling away, and all the horribleness that you could ever possibly imagine. So which one do you want? It's just like, be prepared for both. How about that? Just be like, if you prepare yourself for both situations, then you don't have to, like, it's just like either one can come. It's just like either way. It's like no big deal. Good morning and happy Sunday to y'all. Happy morning to you, Mary. All right. The reason tangible gold and silver is the only real money. They can't print, make perceived digital money if they don't have tangible precious metal backing. Yeah, now I think it's good for an individual, but I think it's horrible for the nation. Like, I think it's good for a nation to be on a gold standard if you're industrious, and you have people who are in the mindset of production and savings, then gold standard's awesome. I'm totally down for it. But we're not in that sort of mindset, and we are not a productive saving nation. We are a debtor consumer nation, which means that ultimately, if we were on a gold standard, we would import stuff because we have a high standard of living and we don't produce enough for ourselves. So we would import stuff, export gold, and we would all suffer in pain and misery and suffering. So gold standard's good for yourself, right? Load up on gold and silver, even Bitcoin on a lesser extent. But that gets you outside of that third-party claim. And that's the reason why I hold it as that insurance policy. It's not going to return as a gold. Like, if you want to be on a gold standard, just go be on one, right? Just put all your money, everything that you have as far as wealth is, go and put it in gold and silver. And then you'll personally be on your own gold standard. You don't have to stress about anybody else out there. Now, it's going to be difficult to go down to the store and say, hey, I want you to accept this for trade or whatever. So you're going to end up having to sell that. But then you're still operating mostly outside of the system, and you are personally on your own gold standard at that point. Now, again, that's a little difficult to operate in that way. Right? I mean, it's just like, I wouldn't even try. But I do like the idea that, you have a box of silver that is going to, protect you in times of uncertainty when it comes to, like, banking crisis, government, shutdown, stuff like that. You have something that is outside of that third-party claim, and there's very few items out there that is going to be as recognizable and traditional and time-proving as silver and gold have been. He's basically saying all the debt owed to China is not paid back. Who's saying that? All the debt owed to China is not gonna paid back. No, it's gonna get paid back. Absolutely, it'll get paid back. There's very little doubt in my mind that every single U.S. Treasury bond will get paid. I don't care who owns them. Right. And now here, let's hypothesize for just a second on that, right? Because, like, people love to do what ifs, right? And I'm not big into what ifs. Because, like, I just don't, like, whatever. You can sit there and just make your mind spin on what ifs all day. I'd rather look at what is happening, right? But let's suppose for just a second that the Federal Reserve is not going, or I'm sorry, that the United States Treasury is somehow not able to pay their debt, and the debt issuance is now having defaulting bonds. Okay, so what does that really mean? It means, like, people out there who have purchased Treasury bonds. You got 30-year bonds all the way down to, notes, where it's just like very short-term very short-term loans, but every single one of these is a loan. And now, if you understand bonds like in the old sense of it, where there used to be paper bonds, right? Now they're all digital and it's all in just computer entries and accounts and stuff like that. But there was a time when you would have like an actual paper bond. It was a piece of paper that had a face value on it that matured over a certain amount of time. So if we could kind of assume just a 10-year bond, it was $100. Let's just assume all this stuff, right? $100 face value bond. I got this paper bond. It's due in 10 years. Says $100 on it. Means in 10 years I can go and cash this in at the bank for $100. Right? At the very bottom of it, there's coupons, like literally little tiny pieces of paper that are attached to the bottom of the bond that are called a coupon that you tear off once a year and go and cash in for the interest payment, right? These are the coupon payments. So when you hear about you remember okay, this is something, let me just take a little side note here. You remember all the times that you might have heard about like old folks being coupon clippers? And you thought they're clipping the little coupons out of the newspaper so they can go down and get a good deal at the store, right? With these coupons. That's not what coupon clipping is. Coupon clippers were the people who are now into retirement. They have a bond portfolio and they are getting their interest payment by clipping the coupon off of the bottom of the bond and going cashing it in. The coupon clippers. Okay. So now you got this bond with all these coupons that are attached to the very bottom of it, and they pay an interest on it. Once all the 10 years has gone by, because it's a 10-year bond, all the coupons will have been paid, and then you can go and cash it in for the face value of it. At any given time, you can sell that bond, right? Even the moment that you get it, it has all the coupons still attached to it, right? And you can go and sell it for either more or less than what you paid for it, right? Because this thing has a value to it aside from the face value and aside from the coupons, right? Like once this thing is printed up, it doesn't change. The bond stays the same. But the price that you can sell it for as an investor, like once I buy it, I own it, it's my asset. I can sell it for whatever I want. I can sell it for a loss. I can sell it for a profit. It's up to me, whatever I want to do with it. Now, if that particular bond and everybody else is like in the market has a demand for it, then what you're going to find is that the price of it's going to go up. And then what the yield, what the investor gets after the maturity of the bond and all the coupons starts to fall because of how much he paid for it, right? The bond doesn't change, but the price and the yield does. This is why price goes up and yield falls. All right. Now, let's suppose that these bonds, and let's just imagine them being paper bonds, and let's imagine that all these people all over the world has purchased these bonds, and now they have certain bonds that are not going to get paid because the Treasury is starting to default. What would that look like, right? Now, immediately, confidence would be lost and the bond market would start to tank. The price of those things would drop immediately and the yield on them would rise dramatically, right? As nobody would want to touch these things. So the price continues to fall and the yield continues to rise. Now, this is going to make it very difficult on the government to borrow more money, but they're probably not going to be borrowing money since they're defaulting anyway, right? So now as the price of these things fall and the yield begins to rise and the people are very panicked about selling them, right? This is like where the chaos and the absolute like Armageddon situation is starting to unfold, right? And who knows how far it would go and how bad that collapse could be, complete destruction. Now, the moment that this starts to happen, where a bond is not going to get paid and it's going to create chaos and uncertainty and loss of confidence within the system, what is it that can be done? Right? See, like the government could say, okay, well, wait a minute, we're not going to issue out any more and we'll just buy back the defaulting bonds, right? Well, that doesn't really make any sense since they're defaulting it on it anyway. But the Federal Reserve can do that. Right? The Federal Reserve can say, hey, wait a minute. You got defaulting bonds. The Treasury's not paying on them. They can't necessarily buy them back because they're already defaulting on these things. What we have is a whole balance sheet full of bonds. We'll take the toxic ones, the ones that aren't paying, and will hand you over the ones that are paying. So there is no toxic bonds in the market. They all sit on the Federal Reserve's balance sheet. Right? So this is one method that could be done on it. Or you can use it as a weapon and say, okay, China or Russia, because Russia's bought U.S. Treasury bonds just recently. I don't know how many people know that, because U.S. Treasury bonds are the world reserve currency, right? I mean, it's essentially dollars, but U.S. Treasuries are essentially as good as dollars. And a lot of times or most of the time, that's what ends up being used for world reserve currency is the U.S. Treasuries. So now maybe they could weaponize that moment, say, hey, man, we'll just default on particular bonds, Russia's bonds and China's bonds, and who else is pissing us off, We'll just allow those particular bonds to default, and we'll pay everybody else's, no worries. So there's ideas of what could happen during this time, but I guarantee you that won't. None of that stuff will happen, because the Federal Reserve will always be able to print up the money to buy the bonds. Always. Now, whether or not there's a purchasing power that's going to come from that, that's a very questionable story in itself. But the idea of the bond not getting paid, no, that's not going to happen. The bond will definitely get paid. Yeah. I can't buy food with currency. They lose trust in the currency. People trust gives currency value. The most important U.S. policy is the one that determines whether the real estate import of debt. What is that? The re-import of debt goes through workers or just corporations. Catch 22. This inflation cycle is here to stay. The carrying cost of assets will continue to drain the owner to the point he has to sell to survive. The carrying cost of assets. Huh. Interesting. All right, 232 people with 87 likes, $10.19 in super chats, because you guys are always so awesome with them super chats. I always appreciate it. Up early. I haven't gone to bed. Oh, really? Yeah, well, I was asleep earlier. I don't know. I went to sleep about 8 o'clock, I guess, and then ended up waking up around 1, 2, something like that, and then just couldn't sleep. So, and then dog wanted out but didn't actually do anything, so she had me outside, and that was that. And once I was outside, I was like, that's it, I'm up. All right, UE, you usually up at 4 a.m.? Impressive. Yeah, actually, I am. Usually up at 4 a.m., yes. Let me cruise back up here a little ways. Germany, 1920, and France, 1760s, just printed. They never defaulted. However, inflation exploded. People starved. Yeah, but I think there was a difference inside of, the idea of what was taking place back in like Germany and Zimbabwe, Venezuela, and stuff like that. These nations don't hold the world reserve currency, right? And so what I think is interesting about it is that if the Federal Reserve just stop printing money, right, like they have, and they start reducing it like they have, at some point there's going to come a moment in which that the reduction in liquidity in liabilities is going to meet a demand that is increasing to try and pay off those debts. And once they meet, then you're going to find that like credit markets and stuff like that start to freeze up. You start to have recessionary pressures. All these things start to react from that. So the Federal Reserve doesn't know where the demand for their liabilities is, right? Because they don't know how many contracts have been written out there that are doing dollars. Like it's not like it's a secret, but like, where do you go to find out that information? Like if you and I did a contract where we were promising to be, get paid back in dollars, how is it that anybody's going to know about that except for us? So the demand for the Fed's liability is a very uncertain position for the Federal Reserve to be in. They know that they have to have a bunch of it out there in order to meet the demand, but they don't know where the demand is. And if the demand all of a sudden finds that there is not enough supply, then boom, it just all of a sudden explodes, right? So they want to make sure that it always seems in supply, because the moment that the demand doesn't think that the supply is there, it's just gonna, they're gonna immediately like, oh, I need my dollars, give them to me, right? And then that'll make them all disappear. Again, it's all a trust and confidence game. I don't know how many people really look at the Federal Reserve in that fashion. Like, most people probably don't. They look at the Federal Reserve as like, oh, you printed way too much money. And I'm thinking, I don't know, they've done enough. All right. Like, they've done enough to get the attention for it, but I don't think they've done enough to cover the demand for liability for their liabilities that exist outside of the country. Like, all that dollar denominated debt that exists outside of the United States. I, I'd be questioning how in the world could they ever possibly print up that much money. They certainly can't do it without sending the United States into an unsustainable debt path. So they're not going to be able to buy, U.S. government debt with it all in order to get that money out there to the system. That would just absolutely crash the United States. So how are they going to do it? UE, there's constant talk of shortage of skilled labor. How much of that has to do with the lack of demand because of how little we produce to begin with? Yeah. Well, you think about it, like, I mean, there's a lack of skilled labor in this country. Well, I mean, that's not surprising to me, because you think about it, like, there was a time, like, if you had a good manufacturing job, it would do well. Like, you could do well. You'd have all the stuff, like, you'd have a decent life, right? I mean, your wife and kids and retirement and all the other stuff, and all you had to do is just show up every single day. It wasn't that hard. But now it's hard because that job isn't enough. Like, it's just like, where's the skilled labor? And it was just like, well, there would probably be some if it was enough to cover the bills, right? But why would somebody go and become a skilled laborer, skilled at what they can do, constructing a house and stuff like that, if all the effort and time and energy gives them enough to buy a car to live in, and that's it? They can't afford anything else from it. That's the unfortunate situation that we are now facing due to the inequality, right? Even a good job sucks. There was, again, like, I take it back to the time long ago. Like, just imagine that you and your buddies, you had a handful of them, and a couple of them were good at building houses, like maybe their dad were carpenters or something like that. A couple of them were good at mechanics. You got whatever, you got your group of dudes there, and you all graduated high school, and a couple of them built their own house, a couple of them pieced together some cars, right? And you all drove around in cars and houses that you built yourself. Now, you didn't have to own those things. You could have sold them, done it again. But what I guess I'm getting at is that the individual themselves were the skilled labor that they could contribute out there in the broader economy. Like, I graduated high school, I built a house, a little dinky house, and I had a family. I didn't like that house. I had to build another one. Right? Like, this was the stories that were told, or they expanded on that particular one, made it bigger. All I guess I'm getting at is that if you have individuals who can build cars and build houses, who are just average, everyday dudes, think about how it is that they could trade that skill back out there to the rest of the economy. Okay? I remember my buddy was telling me that his mom, with, like, I think he had like 4 brothers and sisters, like something, like, I think it was like a family of, like, 5 kids or something. And his mom was like a waitress back in the day, earned enough to put down on a house, to buy a house, like, as a waitress. And now, granted, it happened to be the time in the area that they were in, and it wasn't like, a great house by any means, but it was a house that she could purchase as a waitress. And now you have to work some pretty fancy restaurant or something like that in order to be earning enough income to buy a house nowadays as a waitress. But there was a time when it was possible, right? There was a time it was possible to own a car that you had built. It was possible to build your own home. Now, all this skill that went into the economy that every one of us was contributing, then had a great return back to it, where we all had houses and cars to drive. Houses to live in and cars to drive. right? Because we could do it ourselves. Now it's inequality, right? This has separated everybody. So unless you have a great income, you're not going to be able to find somebody out there who can build a house, because that dude who just graduated high school isn't going to do it. He's not going to build his house. He's not going to contribute by putting another piece of inventory out there, even no matter how cheap and dinky and little it was still a place, right? But they're not doing that now. So all this contribution to the economy that used to exist back in the day when we were producer savers doesn't exist now. All these people have to figure out other ways of making money. Going out on YouTube at 3 o'clock in the morning to figure out, to generate views and revenue, whatever it is. And like that's like what it is that people are having to do now in order to acquire enough income to buy the house, right? I got to work my day job, which is actually in production, and I work building supplies. And so I work in like the actual production field, but then I'm also doing the side hustles on the internet. And I'm also working a side gig where I go and, call bingo on the weekends. Like I do all this stuff, right? In order to figure out how it is that I'm going to make ends meet. Now, what I think about is how many people out there have to compete with that. Like I'm competing against everybody else out there, so I have to do this in order to compete. Now all these other people who are working like a job that was similar to mine also have to compete against me and do other things so that they can earn the income to match what it is that I'm doing as far as my efforts go. And there's more and more and more people who are doing that. They have to. They're like they don't have any other choice. You know? It's either that or live in your car. And, a lot of people don't accept that. They don't want to live in their car. So they have to, go and work their day job and then go and do some other hustle. All right. You are one of the few lucky ones. Who's lucky? Who's lucky, man? If you happen to have saved up by the pandemic and bought a house, you are pretty much sitting on a lottery. Well, yeah, I don't know if you watched my story of buying the house, but it was tough, right? It took everything out of me in order to get into this house. And at the time, I didn't realize what it was that was taking place, or what was about ready to take place, I guess I should say, because I was in a position in which that I thought, man, if interest rates go up, we're going to find house prices just absolutely tank. Right. And this is what I was assuming. And so when I bought into the house, I was just assuming. I just went ahead and just accepted the fact that the house was going to tank in price, that I was going to be underwater, that I was going to have to suffer with that for a while until I figured things, until I figured time went on. And then the house price would eventually go back up again. But I had prepared myself mentally for the house to go underwater by the time that I had purchased it, knowing that I was buying at the top. Like I didn't want to do it. People were like, they were screaming. They were like, dude, you were going to lose it. You're going to be so like foreclosure, all this other stuff. They were like you should have seen the comments on it. So I did. I just said, okay, I'm gonna go underwater on this house after I purchase it. I know I am, but that's okay. It's gonna be the place I live. I don't care. I'm just gonna deal with it, right? Absolutely did not happen. House went completely the other direction, and the price of it just absolutely skyrocketed. There was a moment in time in which that the thing was going up so much, so fast that it was like my day job, my wife's day job, what I could earn on YouTube, my side hustle wasn't making as much money as the house was going up in value every month. It was ridiculous. Absolutely stupid. All right. And so now, as I was mentally prepared to watch it go underwater, I'm watching it like boom, 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 boom every month. And I'm like, holy what? No way. And I realized right then, I was just like, man, this is the separation that continued to happen due to the fact that we just dumped a whole bunch of new money into the system. It's separation between the rich and the poor by property ownership and capitalists. And if you're not in a position of property ownership and capitalist, then you're on the bottom side of the wedge and you're suffering the consequences of new money pouring into the system. And this is the evidence of it. Okay? And so now, as I watch the house price come down a lot from its peak of whatever the ZELLE estimate was ridiculously saying it was, and it's dropped a lot. Like if you were to if I was to put it for sale at that price, I could have taken $80,000 off of the price tag, and I would be where I am today. Right now, where the price is still, or the estimated value even today is still 10%, 15% higher than what I had paid for it. And I had put 10% down on the house, so now I'm sitting with well over $100,000 equity still sitting in the house right now. Right? All this stuff is completely opposite of what it is that I believed was going to take place out there. But the more I started realizing and understanding how the Cantillon effect works and how that new money pours into the system and how it separates the rich from the poor, and there's no better evidence of it through property ownership and capitalists, you can see it. You can see it plain as day. And so, is there going to be a crash coming? Yeah, at some point. At some point there is, right? All the debt comes due at some point, right? How are they going to plan on dealing with it? Because they're not going to just sit around and just watch it crash, right? I mean, if we can describe it, if we can say, hey, this is how the whole thing is going to fall apart. There's 150 professional economists working at the Federal Reserve who I'm sure probably have thought about it too. Yeah. And as I talk about this stuff, I'm not defending the Federal Reserve, right? In fact, am I wearing? Yeah, look here, and the Fed, right? I got my "and the Fed" hat on. It's a matter of understanding who the Fed is, what they are doing, so that you can position yourself appropriately for it. We can't change it. We're not going to change it. I'm trying to change it right now by just spreading the credible threat theory. Because I think if everybody understood the credible threat theory, the Federal Reserve would cease to exist. Now, I'm doing my part, but everybody else is seeming to ignore the whole idea of it, which means that the Federal Reserve is going to continue on, and that's just fine, so long as we understand what it is that we need to do about it. Right? And that's what this whole channel is all about. All right, moving on. God, look at all these comments. This is great. 216 people watching. What time is it? It's not even 5 o'clock here on the West Coast. All right, I'm not quite sure how I'm going to be able to afford a median $600,000 home on 90K income. You're not AP. That's the whole thing. That's why I keep trying to explain it. So, think about it. I bought a house. I have a normal job, right? I work at a lumber yard. I don't have a degree in anything. I didn't go to college or anything, right? I have no degree. I have no family business, family inheritance. I don't have any of that stuff. And I was able to acquire a house in one of the most expensive places in the entire nation. So when people say, man, you just don't understand, you just don't know, all this other stuff, and it was just like, I was able to pull off something that not a lot of people can do from a position that almost nobody can do it from, right? 40 years old, I was drunk, in debt, had nothing, had no car, had no, I had a car, but it was barely working, right? Everything was in a horrible position. I'm 48 years old now. I have close to $100,000 in assets. I'm buying a house. I've built up this YouTube channel. I've, done an amazing amount of stuff that I never thought I would ever do, like going and speaking on stage and stuff like that. All this stuff that had changed in the last 8 years, and people still want to come and say, man, you just don't get it, and I'm like, okay, well, no, I didn't get it before, right? When I would have agreed with you at 40 years old, I totally would have agreed with that. Now, no, I'm getting it. Like, I'm figuring things out. Now, the problem that most people are going to end up suffering with is like, what do we need to do to fix it? And that's not the mindset. You can't fix it, right? It's just like, it's not going to get fixed. It's better to understand that you have to position yourself. You have to position yourself in accordance to what is happening, right? It's like being out on the river in bad weather. Right? You can't fix the problem, right? You can't fix it. It's just like, well, let's not be out here on the river during the weather. Well, that's great, but we're out here on the river right now, so what are we going to do, right? Because we're in the river. We got bad weather, and we need to figure out how it is that we get back to shore. And if this boat's taking on water, we're going to be suffering really bad if we don't do something quick. Right? Now, this is how most people end up being when they look out there at the economy is that they are watching their boat sink with debt. They don't know how to get to shore. They don't know how long the weather is going to be. They see other people out there just flying around on the river, and they seem to be having a good time, and they're wondering why it is that it's looking like this, and they want somebody else to do something about it. Ugh, right? And so it's better to say, hey, man, there's foul weather. We need to be prepared for it. It's not the same fun, good times like when it's sunny and calm out, right? When it's sunny and calm, that's great. We enjoy it while we can, but that's not going to last forever. Just like the bad weather won't either. I'm up at least 2 every day for work. It's a great choice as your major. All right. Houses are not more expensive. Our money is worthless. 94% of our value dollar is gone. GeoJam, that's like, okay, so this is a very interesting thing to look at. Like, you think, okay, 94% of our dollar is gone, but then you're also considering the dollar has been a constant. Not necessarily in the purchasing power or the value of it, but in what it is itself, right? See, I have a collection of currency. I have a 19 Federal Reserve note, right? Oh, I'm sorry, 19 Federal, a 1950s Federal Reserve note. I have a 1950s, what was it, 56 or something like that? I can't remember. It was, it's a U.S. Treasury note. And then I have a 1957 silver certificate. And so now what I found interesting about it is that the Federal Reserve note, in this 3 collection of notes that I have, a Federal Reserve note, a U.S. Treasury note, and a silver certificate, the Federal Reserve note is the oldest note in this particular collection of 3 that I have, with the United States Treasury note being the second oldest, and then the silver certificate being the newest issuance. All 3 of these currencies were in circulation at the exact same time. I don't know how many people recognized the difference between any of them. Like, did they even care? Like, when they opened their wallet and they saw a blue dot, a red dot, or a green dot on that currency, did that make any difference to them whatsoever? Probably not. So the dollar wasn't the same. There was 3 different forms of currency existing at the exact same moment, right? Silver certificates, U.S. Treasury notes, Federal Reserve notes. These were all paper currencies that were being used. Now, I think to myself, those aren't the same thing. The silver certificate was basically a claim ticket to a piece of silver that was supposed to be sitting on a shelf somewhere. Right? The Federal Reserve note is a liability of the Federal Reserve and the assets on their balance sheet. And something similar to that of the U.S. Treasury notes, but none of these things were looked at differently. This is important to understand, because currency is not the same. We want it to be the same. We look at it, we say, no, $1. $1. I'm talking about $1. Well, are you talking about a silver dollar? Right? And I mean, I got like silver dollars, and I assure you, they buy a hell of a lot more if I was to pay attention to what I'm doing with it than the silver certificate will do, because you can't get anything for the silver certificate except for the purchasing power of the face value purchasing power, which is almost nothing. Right? Even though at one time these two things were exactly the same thing. One of them was a claim ticket for the other. Right? But now one of them doesn't have purchasing power, the other one does if I do it right. So now I think to myself, okay, is currency really the same thing as money? Because here you had a silver certificate and a silver coin. And now the silver certificate has no purchasing power to it, but the silver coin does. Right? The coin was money. The silver certificate was currency. It was a claim ticket for money, but in itself, it was just a currency. It was meant to transfer, right, wealth from one person to another. It wasn't meant to be the money itself. The money, it was a claim ticket for the money. The money was sitting on a shelf somewhere. So now when we look at it differently and we say, okay, well, this is currency, and currency is meant to travel, right, from one to another. It trades my goods and services for your goods and services. And now when I look at goods and services being traded with currency, it doesn't really matter what the value is because I'm going to trade my goods and services for your goods and services, and this is going to facilitate the trade, right? Now, if I wanted to hold value, right, after we're done trading and I get my portion of the trade, if I want that part to hold value, well, then I got to put it into something that's not currency, right? Because currency is meant to transfer goods and services. It's not meant to hold value. If I want it to hold value, then I have to put it into money or I have to put it into some sort of other asset. But I can't keep it in currency because now I'm expecting it to do something that it doesn't do. It doesn't hold value. It's meant to trade goods and services for other goods and services. So when we say, oh, the dollar lost 94% of its value, and I'm like, nah, like currency did. But currency doesn't hold value. Currency is meant to trade goods and services for other goods and services. If you want it to hold value, you got to take your currency and transfer it into something that will hold value, right? Because currency is just meant to do the trade. It's not meant to hold value. And although we wish and hope and dream and wish it, and beg that it does and believe that it should, it doesn't. So there's no point in believing that it should. And there's no point in believing that it does, right? Because it doesn't do it. But it does transfer goods and services for other goods and services. And once you recognize it and look at it this way, then you don't think about it, oh, dollar lost 94% of its value. It's just like, yeah, because it wasn't meant to hold value. It's meant to do goods and services. That's it. The Fed is dead. It's not. See, this is the problem. The Fed isn't dead. The Fed is completely alive and working and functioning and doing a great job of what it is that they said they were going to do. Most people don't see it that way, and that's how the Fed actually gains a lot of their power, is by people believing that they had screwed up and don't know what they're doing, and inflation is going to be running rampant and all this other stuff. And by having that sort of feelings and belief about the Federal Reserve is able to continue to conduct themselves the way they do. See, if a lot of people looked at it like, and again, I don't mean to be sounding bragging or arrogant or anything like that, but if people were to look at it the way that I look at it and follow the credible threat theory, the Federal Reserve would be dead. They would fail. All right. But since nobody's going to look at it that way, they're not going to see the credible threat theory. They're going to pretend that the 2% target is something they're attempting to achieve. And if they go on believing that, then the Federal Reserve is going to continue to have the power that they do. And so since I don't really believe that it's going to go any other way, that's what I think is going to happen. And then I'm going to act accordingly. I wish someone had told me to buy gold straight out of high school. Yes, Simon, when you were the one to speak this and it changed my mindset and now I'm diversified. Well, good. Currency is just reference to goods and services otherwise worthless. It's just that's it. I mean, and like how alleviating of a feeling, how like stress relieving it is to know that you don't count on money to hold value anymore. Like it's just like you don't even expect it. People are like, oh, it's losing its value and all this over the course of the years and all this other stuff. And it's just like, oh, yeah, well, whatever. Like, like I don't even think about it in that fashion anymore. All I think about is just like, how do I trade this over to other goods and services or assets or, investments or whatever. But I don't think about it as like, whether or not the dollar is going to be able to retain its purchasing power going into the future. I just don't like, I, of course not. Like, of course it's not. you know, uh, physically crypto does not. Physically crypto. Interesting. All right. Let's cruise down here. You don't want the Fed to fail unless you are fully food, health, shelter, and energy independent. Yeah, I would kind of agree with that. For the most part. But I think that's just in our current understanding of the Fed. Like, I think it's possible that, we can operate without a Federal Reserve and, all that other stuff. it's just that it's so difficult for people to understand like the business cycle and how there's going to be booms and busts and equilibrium found, because most likely if you don't have like a Federal Reserve or a central banking system and a fiat currency, then you're going to have to rely on that of a limited currency, whether it's gold or cryptocurrencies or something of that nature. And when you do that, then the most industrious people will hoard all the money for themselves, denying everybody else the ability to do transactions. They fall into poverty and misery, and then eventually equilibrium, where the redistribution of that gold and silver or Bitcoin or whatever it is, that concentration of wealth, gets redistributed back out there. This is the problem that we face, is that most people are not prepared to deal with those sort of business cycles where that concentration of wealth begins to happen. People get pissed, say, hey, you can't do that. You need to give it up. You need to share your wealth and all this other stuff. And it was just like, well, we weren't industrious producers, savers, so that we could just give it away, right? But eventually what ends up happening with the depressionary effects that come from the lack of transactions due to the hoarding of wealth is that they are forced, literally forced, because of no other choice than to redistribute that wealth back out there to the most industrious people again. And so this cycle is so hard for people to deal with and understand, that the fiat currency system, although as devastating as it is in the inequality growth that comes from it, most people are more appreciative of it because they get to balance out their life a little easier as the government interventions with stimulus checks and, assistance and subsidies and whatever it is that's going on, they try and help and deal with the pain a little bit better by essentially bringing in some sort of support. The only problem with doing that is that it's new money that comes in that causes that. And anytime you ever bring in new money into the system, no matter what you do or how you do it, even if it's in support of the lower side, the bottom side of the wedge, or however you want to describe it, even if you were to go there with it, the money still ends up floating up to the top, and it separates, the rich from the poor. So the inequality grows no matter how you do it, so long as you have a fiat currency system injecting new money into the system. Otherwise, you got pain and misery and suffering on the other side of that. Again, we've talked about this a million times. There's no way you can go around it. Like, people want, well, can't we eat cake, and can't we have cake and eat it and all that? And it's like, no, of course not. You can have one or the other. That's it. Uh, what do you think about DOGE? I don't. All right, everyone. I mean, I don't mean to, like, just disregard the question or whatever, but I don't think about the department. Like, are you talking Dogecoin or the Department of Government Efficiency? Because really, I think the Department of Government Efficiency is a bunch of noise. I think it's there to create a bunch of frustration and anxiety and raise, like, heightened, like, fear or whatever to the economy, to the people out there. And whether or not half the stuff that they talk about actually comes true, or to what effect that it really has on the economy, I think is more of a wait and see. But to put my thoughts and energy and everything into a bunch of like what ifs that could come from a stirring up of this hornet's nest of stuff, I just, like, I don't know. Like, to me, it's just like I back away from it, and I look and I say, okay, this seems to me to be very credible threat. Like, how are the people reacting to this information? Right? Is it creating inflationary pressure? Is it creating a slowdown in the economy? Are people, you know, worried about investing? Are people, what is it that's going on? What is this generating the feeling of? Because the outcome of all that stuff, who knows, man? I mean, right? It's just, again, I just wait and see to, it comes from it. If you haven't noticed, like, I study into monetary policy, because when you study into monetary policy, it's the one thing that really impacts your life. It actually impacts every single person's life, unlike anything else does. It's the money. It's like the one thing. Like, we all eat different food. We all live in different places. We all wear different types of clothes, drive different cars, live in different type of houses, all this other stuff. But we all use the same money. Right? It's the one thing that ties us all together. All right. They need to stop government waste. You know what? Skeptical. I know. So what is it? Skeptical 59. I appreciate the comment, and I understand. Like, I mean, just saying it outright, yes, I agree with you. Like, we need to stop, like, government waste and all that. But when you look at it on a bigger picture and you think about how the government or how it is that the system tries to get money out there into this out there, it's it seems like we would just think, no, why don't they take it away from this wasteful spending and then go and put it here where it makes more sense, right? Now, just saying the words, right, makes sense. Right? Take it away from here where it's wasteful, put it over here where it can be efficient. All right. That's a matter of an opinion, and that's the meaning that you have given it. Now, just because we believe it's wasteful over here, and it may be very obvious when you even say what it is that it's going on over there, that's still your opinion that that's wasteful spending. Over here, it might be more efficient, and you would have all the reasons to describe why it'd be more efficient. That makes sense, right? When you say these things, it makes sense. But what we have to understand is that the system is trying to get money injected into the whole thing, right? To get money flowing into all channels, like to fill the sluices. And when you go and get, how do you like get the okay? How do you get the money out there to the world? How is it the United States gets the money out there to the world? They could borrow it from us, but then that just actually makes the United States richer and harder on those other nations. You got to get money out there to them, not try to get it back. If you lend it to them, then you're going to get the money back plus an interest rate. How do you get the money out there to them? Okay. So there's a lot of ways. Mainly, we buy stuff. We buy the world's stuff. But if that doesn't do it, and you have a consumer who is completely debt saturated and making it very difficult for them to go and buy the production of the world, how is it that you get the money out there to the world? Okay, it's just like, consumer, here's some credit cards. Ah, dang, you're already loaded up on debt and you can't use these credit cards, and consuming is hard to get the money out of the United States. How do you get it out? Well, why don't we just give it away? And it doesn't really matter where you go with it, because it's not a matter of where it goes. It just needs to get out. It needs to go anywhere. It needs to go anywhere. And in fact, if you go and you give it away to people who are not sensible, they will just blast that money out there, wastefully spend it, and it'll even find its way faster out there into the system, into the sluices. See, if you give it to somebody who is very mindful of it, and they're like, oh no, we're going to be very conservative with this money and pay attention to where it's going and not just go and wastefully spend it, then it sits in an account somewhere, right? Waiting to be deployed in a very proper manner. No, that's not what they want. They want to get the money out, get it out there. So if they give it to wasteful spending people who are going to blast it on something that doesn't make any sense, perfect. Perfect. There you go. Here's a bunch of money. Go and get it out there and let that start filling up the sluices. Nobody sees it this way, and I understand why they don't see it this way, because it doesn't make sense as an individual. Man, that doesn't make any sense. But we got to understand that they're in a system in which that they are trying to figure out how to get the liabilities out there to the world, so that the contracts that have been written in dollars have some sort of dollars to pay them. And how do you get that liability out there to the world if you got consumers who are debt saturated, who are loaded up on stuff, right? How do you get those dollars out there? What kind of organization you got? God, it's disgusting. Here you go. Here's a bunch of money. Go and blast that out there. Just get it out. Whatever. You guys won't be around for long doing that anyway. So whatever. As long as the money gets out there. That's it. And that's really, like, to understand it in that fashion. It's just like all of a sudden you're like, oh, that's why they have such wasteful government stupid programs out there, because it's not a matter of doing something that's like smart and intelligent. It's just a matter of just trying to get the money out. That's it. Yeah. So yeah, wasteful spending projects, perfect. uh, Also, here in San Francisco, where I live, property price cuts are going on constantly. Yeah, but okay. I can understand that, but if you like, okay, so 3 years ago I bought my house. Now I'm just gonna make up some numbers because whatever, everybody's place is different. But let's just assume that it was $500,000, right? And then that shot up to $600,000, and now it's at 530. Okay. Say something like that has taken place. Now, here, month after month after month after month after month, you've seen these prices dropping, right, from its peak. And peak last year, sometime, and 12 months in a row. And you've seen this property price has been falling, and now it's sitting at what, 10% higher than what it was when, before the purchasing price of it, or something of that nature, and 3.5% higher, right? So what I guess I'm trying to get at is that even though you're seeing prices dropping, we're not seeing them dropping past a level that was prior to the interest rates, right? So think about it like this: when the interest rates shot up, like house prices immediately started to skyrocket. Right after that, it was just the most amazing thing that everybody had ever seen, right? Because nobody thought it was going to happen like that. But now the prices are coming down to a certain, coming down in a how should I say it? Not necessarily back to where they were, right? But they have come down in a great proportion. Right? Let's just put it that way. So now everybody who has purchased a house in that time frame, right in there, right, which isn't very many people, doesn't leave a whole lot of houses out there that have sold at that high price or at a higher interest rate at it. And basically, the market froze 3 years ago, right? And very slowly have houses trickled into sales after that. So this is where I kind of basically I'm getting at is that because we're starting to see the price come down to what it was 3 years ago, that was the price that it was right before it started to freeze. So now here we get this price down to where it was with very few people who were in it from before. Right? Now we have a market that is starting to thaw out or would thaw out at that time. With the lowering of interest rates promised from the Federal Reserve, we can see right in here that this is like the cheapest that it's going to get. Right? Could it go further? Sure, absolutely it could. But we're not seeing things within the economy that's going to allow for that as the demand starts to ramp up the moment that the prices come down or the interest rates come down. This isn't easy for a lot of people to they don't want to accept it. Like especially people who haven't got into a house yet. And and the frustrating part about it is that all the things that would make sense about making it easier to get into a house, like house prices coming down or interest rates becoming, more achievable for the wages that are earned. And because the situation arises in which that should happen, but it doesn't, like interest rates go up, house prices come down, right? I don't know how many times I heard that, but it didn't take place in that fashion. Now we got interest rates coming down and we got house prices coming down as well at the same time. Like interest rates peaked out last year. And with the promise of the Federal Reserve cutting interest rates sometime at the end of the year, it's already got mortgage rates coming down. Like these are the lowest that it's been all year, essentially since the Federal Reserve decided that they were going to cut rates and mortgage rates shot up. The promise and the expectation in the future of rates coming down is starting to move the mortgage market down, the mortgage rates down. It's only a matter of time before we're going to find that the people are going to say, "Hey, that's my number. I'm going to jump in. I believe that interest rates are going to go down even further," and they start buying into the house. This is where the demand continues to ramp up in silence. Like like a lot of people think that the demand has just gone away. It's not. Like the demand is growing. Every single day, there's another person out there who is not buying a house who's wanting to buy a house. And every single day, we're seeing the housing market slow down on the sales. Every time there's a lack of sales taking place, that's another person who's put into the hopper of the waiting list trying to find a better opportunity. And the moment that opportunity starts to present itself, all the demand starts to show up. Anyway. What about what happened in 1981 with Volcker raising rates to 20% to kill inflation? What about it? That was a different time, right? It was a different time taking place because you actually had, like, right now, there is the only people who don't like the dollar is like a few nations out there who have been sanctioned in the United States citizens. Everybody else around the globe loves the dollar, right? We're the only ones, right? Like us as citizens don't like it, and the sanctioned nations don't like it, but everybody else thinks it's awesome, right? And so now back in like the early 80s and late 70s, there was a situation in which that nobody wanted the dollar. They were like, "Screw you, Nixon. You cut the gold standard off. Nobody wants the dollar anymore." And the dollar was suffering. Like it was failing. People did not want it. They weren't going to use it. There was going to be something else out there since, Nixon severed the gold standard. People were like, "Screw you. We're out of here." And this is where like a lot of the Swiss bank accounts and stuff like this. I don't know if people realize it. The Swiss were the first bank to put a negative interest rate on an account. And it was on foreign depositors putting money in their accounts. They were like, "Hey, stop putting money in our account. Stop opening up these accounts and sending us money. You're causing the Swiss franc to grow too strong, and it's screwing up the exports." So they literally started charging people a negative interest rate to deposit money in a Swiss bank. Right? It was one of the first, I think it was like the first account of it in history. Now, at the same time, the dollar was losing faith. Like people were like, "Screw you, we're out of here." The Carter administration was like doing whatever they could to try and figure out what they could try and solve this economy. And they were forced, like the US Treasury at that time was forced into selling US Treasury debt that was going to be due in German marks and Swiss francs. That's right. The United States, they're called Carter bonds. Go look them up yourself. The United States was selling US debt, not that was due, not in US dollars, but was due in German marks and Swiss francs. This is how bad it got. Like they couldn't even they're like, "Shoot, man, we can't even borrow money out here unless we borrow it with the promise that we're going to pay it back in one of these other currencies out there." And then they were able to be able to borrow money at that point. And so it was a whole different situation that was happening. Right? Now, when Volcker shot interest rates up to 20%, everybody turned their eyes to the United States and says, "How much are interest rates?" They're like, "Hey, it's way up here, right? 10, 15% that you can get a return on your capital investments." And people were like, "Well, hell, man. I mean, the United States paying a pretty penny, right, on all those debts." So all of a sudden, everybody started looking towards the United States and saying, "Okay, well, they're the best option in the entire world, right?" And so they started buying into those U.S. Treasury debts at that point. But they weren't going to be able to do it without creating the confidence within the people. They had lost that confidence. The Carter bond issuance is proof enough. It was just like, man, these guys out here do not, like talking about the world, do not trust the United States at all. Volcker shot that stuff up to 20%. They started issuing out U.S. Treasuries at a high return. People started loaning the government money, and it turned out to be a pretty good deal. And it ended up being so popular that everybody around the globe started using it in place of gold. And now U.S. Treasuries are essentially the world reserve currency, holding the place of what would have been considered gold back in the day. All right, that was our best shot. I'm getting rid of the dollar. And the price tags around here in this city have nothing to do with interest rates. It has to do with greed. It doesn't have to do with greed. It has to do, I'm assuming San Francisco is where you're talking. It has to do with the sheer amount of money that is there, right? Supply and demand factors in accordance to what it is that the people can afford in that particular area. Like it blew me away. I went to a Starbucks and I forget where we were at, some city. Anyway, I bought two coffees and like I don't know, two biscuits or whatever to eat. And it was like 20 something dollars. And I'm thinking the exact same thing back home would have cost like 12 bucks. Right. And so I know it was just because of the location that we were at that everything was a lot more money and everybody was just dumping it. Like, I had no problem. They were just spending the money like it wasn't a big deal. And so to understand, like, if you have more people who are spending that much more money, then you have more money to in circulation, more money velocity is happening. There's going to be a higher demand for that money in that particular area. You go to some other place where there's not a lot of money circulating around and not a lot of people have it, well, then they're not going to be able to charge, $22 for two coffees and two biscuits. They're going to have to charge $12 for it because that's what people are going to be willing to pay, or else they just won't simply exist there. Right. Thank you, AP, for the $5. This is great, man. We got a bunch of you out here. 270 people watching, 136 likes. Been at it for an hour and 25 minutes. How much? Oh, guys, I'm going to have to call it quits here. I only have 6% left on my phone. All right. They say I'm crazy learning card counting, 90K salary, 600K home. What I am going to do? Screwed in old system. Gotta find way to grow wealth. Huh. Okay. Well, thank you very much for the $5, AP. 0.2% return on investment per hour. Interesting. Make me off selling bees than off selling fruits or honey. All right. What do you think of Walmart having, what does it say? Oh, shit, guys. Having electric price changes during the time of the day. Yeah, that's kind of interesting, but I think that's really just an easier way of not having to go around and just, change all the prices or having, an individual going and price tag changes. I work at a retail store and it is a constant. It is a constant because there's a million little products inside of the store and they don't always go up. Sometimes they go down. And there's like literally you could pay somebody to just do that, just to sit around, just, checking prices and, changing them around. So that kind of almost makes sense just just from the simplicity of it and the ease and the fact that you don't have to pay somebody to do it. So, yeah, I mean, I guess like a lot of people could look at it in a more fearful tactic saying, man, they can start ticking the prices up like every couple of minutes or whatever. In that sense, yeah, that's true. They could, but I look at it from the retail aspect of it, from working at a retail location, that it's probably more just out of convenience and ease. All right. Alrighty, guys. I would love to sit here and keep hanging out. We're an hour and 27 minutes into this with 263 people watching and 148 likes. If you really enjoyed this live stream, please go and hit that like button. The YouTube algorithm will pick up the video, spread it around for more people to join in after it is uploaded. I'm going to come back here this afternoon. We're going to do another special live stream. I got the purchase. I bought another vehicle, and I can't wait to tell you the story about it. And so anyway, let's see here, what else do I got? Yeah, so if you come back this afternoon, you'll hear the story on the new purchase that I made. All right, uneducated economist. There we go. You guys let me know.